Hello and good afternoon. This is Sherwood Tucker with American Ag Marketing from downtown Chicago on Monday, October the 14th, 2013 at 1:38 p.m. And looking across the board here at the close of the markets today, we're showing December corn closing up 4 cents at 4.37 1/4. The March corn closing up 3 3/4 at 4.50 even. We have November soybeans closing up today at 4 3/4 at 12.71 1/2. Well off their highs at 12.80. They sold off pretty much throughout the day after opening higher. We have January soybeans closing higher by 4 1/2 at 12.70 3/4. The December wheat closing down 1/2 cent, 6.91 3/4. March wheat 7.01 1/2, up 1/2 cent. And we have Kansas City wheat closing up 1/4, the December contract at 7.60 1/2, while March was down 1/4 at 7.58 3/4. So not much action in KC wheat today. Couple of comments, highlights, news from today were that there are still being reports of increased yields, anywhere coming in from 157 to 160. As harvest continues to move forward, the reports coming in from producers are that they're getting as good as or even better than expected yields than what they anticipated. The trade is estimating corn harvest at 25 to 28% complete versus the 38% average at this time. And corn was possibly catching a bid today due to comments from the Obama administration saying that they're firmly committed to the development of all biofuels, and that's coming in the face of the EPA, which at this time has made no final decision about its proposal to cut ethanol production by 800 million gallons, which equates to about 285 million bushels annually. The support area, as we discussed this morning, remains at 432 and layering down to about the 405 area. As we wrote about in our Friday's newsletter, we're still looking for a rally anywhere from 30 to 40 cents from this range, as long as the lows hold. Resistance coming in at about 450, based on chart formation and some fundamental backdrop and seasonalities. If you, as a speculator, if you do decide to go long this market, be sure to use a close stop right in around the current lows there. In soybeans, some highlights and news were that the spread from November to January closed inverted 1 1/2 to 1 3/4 cents, which again we think is going to turn around. There should be somewhat of a carry with the harvest that is being reported, and also with the increased rains that South America started to get, especially in Brazil and Argentina, which has been quite a concern now that they're in the sowing season. And we're also looking for possibly some increased acreage in South America too, with the corn to soybean ratio. Just makes more sense to plant more soybeans this year, basically. China was a reported buyer of 200,000 to 250,000 metric tons of beans, but there's no way to confirm that with the government shutdown and no reports coming out of the USDA. Trade estimates are that harvest is 35 to 40% complete for the soybean market versus their 5-year average of 58%. We're looking at support now around the $12.60 area, $12.60 area, with resistance at 305. We're still leaning negative, like we wrote about Friday in our newsletter. This market, even though we did rebound from some new lows today, if the support's taken out at the $12.60 area, it could open the door to prices around the $12.10 area. That is, if we do take out the current new lows here, which we rebounded off of today. That's about it. That's the highlights from today's grain session. If you have any questions or comments, feel free to visit us at our website, www.americanagmarketing.com. Also, feel free to call us anytime at 312-987-2072, and we'll be happy to take care of any of your questions or comments. Have a great afternoon, stay safe, and we'll be back to you tomorrow morning with the opening comments. Have a great night.